All right, welcome everybody to the Client Support webinar for October 18th, 2023. Great to have everybody here and an excellent turnout. Okay, so this is the webinar where it's basically your webinar. You can ask me questions and of course I answer those questions, and we do this on a weekly basis, so anything that comes up during the week, whether you're using the software or not, you can certainly come here for clarification. Same thing with our courses, if you're taking any of the courses as well. All right, so before I get going, Jean, anything you want to talk about?
Well, welcome everyone, and if you can hear the audio and see the webinar screen, give us a hello in the questions area. That just lets us know all of the technology's working. And welcome to everyone that's here live and also to everyone watching the recording. The other thing I did want to mention, Stock Analysis Friday. Got to join us for that on Fridays. It's at 8:30 a.m. Pacific time every Friday on the YouTube channel, and I'm going to post the link for that. All right, back to you, Bennett.
All right, great, thank you. Okay, so let me go through the administrational items. You guys think about questions you want to ask me, go ahead and type them in the questions window while I go through this information. All right, so on every webinar, we have to talk about and explain the risks involved in trading the financial markets. And like I always say, without that risk, there is no opportunity. So you got to consider that. And we also want you to consider the fact that you need to protect yourself. Not every trade's a winning trade. You know, we lose a lot, okay? But you have to protect your downside as best as possible so you can come back from that. And when you're, testing an account using a simulated account, if you're, in the testing phase, you're basically your risk control is just going to probably keep your system fairly flat while you experiment and try different things, right? And that's okay. That's far better than losing all your money. And we suggest trading in a simulated account before actually trading with real money to make sure you do have an edge. All right, and then we work in a realm of probabilities. All right, nothing's guaranteed. Even if you have an edge, you're going to end up on the wrong side of the probability matrix. That's the way it works. Okay, so again, that's where risk control comes in to save your day. Can't say enough about risk control. It's really the vital part of this whole business that we do. And then finally, run any of the ideas, or even if we look at stocks that you like here, run those by your financial advisor or whoever manages your money to be sure they're suitable for you. We don't know your personal situation, and of course they do. So definitely make sure you do that. All right, so if you have any questions on any of that, let me know. We have 2 books on money management that do a great job preparing you for risk control. So make sure you check those out if you haven't already, or if you're having trouble with your risk control. New book, The Art of Trading, on the far right, 2nd edition's coming out, and pretty excited about that book. I think that's going to be the best book I've ever written. In terms of software, as you all know, because you're here, we have basically charting software, we have scanners, and we have risk control software as well. So that's available too. All right, so let me come out of here, and then let me see what kind of questions we got. And we'll take it from there. All right, so let's see. All right, okay, so Jim, let's jump down. Let me just dump this here. Let's jump down. What are you using, TradeStation or Ninja? I think you're using Ninja, right? So USO, okay. And USO, your 60 video random, I was green. I checked my setting. Okay, well, let's go through that again on the 60-minute chart. So first thing to do is make sure you're connected to your intraday data feed. All right, you're not looking at an old one, okay? Because mine was green back in September. So make sure you have the current prices set up. Then the next thing to do is under data series, okay, on Ninja. All right, I have 3,000 bars back, so check that. And then I have, give me 1 second. Where is that? Oh, wait. So you've got that, right? Then scroll down. Let's just make sure all your other settings are okay. This is under data series, okay? All right, so then the next thing to do is go into your indicators and go to the PTF and make sure you have bar on close under calculate. I just use bar on close. Check that. And if you don't, change that and then hit OK and it should refresh itself. Okay, see if that does it. Now, if it's still not right, then we may have different data, but I think that should probably clear it up. So let me know, okay? And if that does clear it up, what I strongly suggest doing, okay, is take all the drawing tools off, and then under template, save as, and resave it so you have that setting permanently, okay? Okay, yeah, 200 bars back is not very good, okay? So you can go more than that. Oh, 2,000. Yeah, try 3,000. See if that makes a difference. And make sure you have on close. Now, in terms of data, okay, I have trading hours set up as use instrument settings because it's a stock. So I just have instrument settings. And see if that does it. All right, any other questions? This is exactly good though. It's exactly where you come in and ask questions like that. As far as I know, I think we're probably one of the only financial company where we actually hold these weekly seminars free, okay? A lot of people charge for them, but we actually hold them free because of the fact that I think it's important to provide that kind of service to our clients. People spend a lot of money for our software, so they should, have this available to them so they know how to use it and so forth. All right, anybody else? Any other questions? Oh, Alexander, my pleasure. Because I'm going to tell you, I don't think you'll find many other companies doing that. The only time we charge you is when we have to remote onto your computer after the 30 days of your initial purchase. And the reason for that is because that's a service. And, we have Mark, our technical guy, do that. So, he has to be compensated for that. So we have to charge for that. That usually makes a lot of people mad that we have to charge for that. But, that's one of those things that we just have to, okay? We don't want to be losing money here, right? Okay, so we discussed that in the instructions, Jim, but basically the aggressive settings, what are you referring to? The art reversals, right? So the art reversals, if we go into that, it's a good question. So if you want more clarification on that, I just want to let you know it's in the instructions. But on the art reversals, Okay, let me just load. I took mine off here, I guess. Sure, it's not on there someplace. Okay, so on the art reversals, we have an aggressive setting and a conservative setting, and it has to do with the strictness of what we're looking for and how far back in history we want to go to take a look at those. So it's a combination of things. So let's set it to, it's on aggressive right now. It won't change the indicator reading actually. Give me 1 second. We're gonna do with it again. There it is. Okay, so the conservative, okay, makes it a little more strict, okay? The quick mode here applies it to more history, okay? So that type of thing. So when we talk about aggressive, we want to see more reversals and less strictness of looking at the momentum that went into them, and also to the price pattern that goes into it. So why would we want that changed? Well, it depends on how you're using them. All right, if you're using them to scale out of a trend, you may prefer to have them on a more aggressive setting. If you're, trading between a channeled area that's pretty tight, you may want to have a more aggressive setting. But the point is you can play around with that to see what fits your mode of trading the best on the kind of market you're in. So it just is a little bit more flexibility on the amount of signals that you'll see. Same thing here on the pyramids. We did the same thing with the pyramids. If you look here, we have a min score. The higher the min score, the more restrictive the signals will be. The lower, the less, and sometimes it makes no difference at all because the patterns in the market, on that particular market you're looking at, may not cause the min score to cause any difference, okay? That type of thing. But that's kind of what it's all about. And again, we give you defaults settings, but again, a lot of people like to tweak those for customization and playing around with what works best for you and your style of trading. Some people don't like to scale out that much, so they want it more conservative. Some people want it more aggressive because they like to scale out more, that type of thing. My min score is a 5. I keep it at a 5, which is the default. Now, if you start getting stopped out a lot on the pyramids, because of the trend may not change, but you're getting stopped out on the pyramids, maybe your pyramids are being too aggressive. So you can higher that min score, okay? Increase it a little to make them a little less, all right? But sometimes it makes no difference at all because it all depends on the pattern that it's analyzing. A pattern is a pattern. So if you're seeing a min score change that doesn't have any effect, it's because even with the min score change, the pattern wasn't enough to change it, to change the number of pyramids and so forth. All right. So it just depends. You can play around with that setting as well. Great questions. Anybody else? Anybody having any trouble with Ninja on data connections? Okay. I've got my kinetic and my knit continuum. So I've got the futures market here and the kinetic for my intraday stocks and stuff. But some people import their data, so it just depends. And then, you got TradeStation. You got many TradeStation users as well. Now, TradeStation, just for the TradeStation users, there are many scanners. If you take a look at the apps up here, our scanners are programmed in Radar Screen. Radar Screen is a real-time scanner in TradeStation, but they also have something called Scanner. And here's the difference. Radar screen, you don't have to refresh, okay? When you basically put a symbol in radar screen, it's constantly refreshing every time that market trades in that particular symbol. With the scanner here, okay, you can create scans, you can, run your scans, but it does it at that precise, when you hit the scan or run button, it takes a look at the market at that moment and delivers results. So it's not constantly rescanning for you, but you can keep hitting the run button and have it scan again and again and again. So that just depends on what you need. Now, the scanner itself, this one would probably be fine if you're a position trader and you're a longer term trader, because you don't need it running. Now, if you're a day trader, you're going to probably want everything to be on radar screen, okay? Radar screen is considered the ultimate scanner in TradeStation, but there are alternatives. And the nice thing about the scanner, which is up here, is you can program and create your own scans, okay? A lot easier than you can in radar screen. Okay, so it's a little bit more user-friendly for that. So a lot of people ask me, what's the difference between the scanner and radar screen? That's it, okay? Anybody else? Boy, quiet, everybody quiet today. Things would be working quite well then. That's a good sign, right? Any questions on risk reward calculator and how to use it? Any questions on any other software tools? Like we got the OWL, we got the Trendline Master, the Emotional Reader Index, anything like that?
See, Ben, it's a little like Thanksgiving. When everyone's quiet, means that everything tastes good.
Yeah, exactly. Exactly. Ooh, Alexander said he just had an earthquake. Ooh, big one?
Whoa.
Was it a
He's
big
in
one?
California. He's in California.
4.5, that's pretty good size. Pretty good jolt. Wow. Yeah, I can remember that. We used to feel them too. Kind of interesting. Sometimes they come in waves. Sometimes you get one and then they have another one.
I remember that one that we had where we could see the grass kind of, it rolled.
Yeah.
Remember that? That was crazy.
Also, too, we had a pond and it knocked the rock off the pond.
Yep. Yeah. Oh, good question, Alexander.
And you need kind of a programming degree for that in radar screen. So that's why a lot of people prefer, and I could never show you in a half an hour session, but in radar screen, we do all the programming for that, okay, in here. And you can set up custom scans on scans that they have already built in there, but you have to understand easy language in order for you to be able to program it. This is why a lot of people prefer, okay, the scanner option, because you can go in here to create scan, name it, and then you can put in your formula here, but it's a lot easier doing it in here than it is in radar screen, okay? Then they have sample scans here too that you can use. These are ones pre-set up, so to speak. But there are some good videos on this. Here's a tutorial page here. Hold on. If you go here, I'll probably take you to a tutorial. Okay, you got to sign into YouTube. So I don't have that. I'm on a different computer. But if you have a YouTube account, you can sign in and look at the tutorial on how to do it. So I would probably focus on just the scanner for programming. Now, if you learn easy language, then you could do the other. And what you would do is you would create an ELD file, and then you'd import that ELD file into the, you go up here where it says File, all right, and then you import your created easy language ELD file. And then once you install that, like you do with our software, then that would create the scan as a indicator in the scanner, and you'd be all set. Okay, and then you can create a template, whatnot. But you have to know easy language for that one. This one, you can do it without importing an ELD file. You can just create it yourself, but you still have to have the basics of a code, but that's not that hard, okay? Let me just see if I put X, Y, Z. Let's see what happens here. Okay, so then you can put your symbols in here, symbols to exclude. Let's just say all stocks. All right, select criteria. Okay, so then here is where you can get into the criteria here. Okay, you can choose an indicator or whatever you want to do. But again, that's where the tutorial is. And then once you set that up, let's just see indicators. Okay, let's see what indicators. So I can say, okay, scan volume. If we go down in volume, you could pick volume. You could pick Bollinger Band spreads and things like that, whatever you want, and then put the field in here of the spread value or the volume value, whatever. But it's a little more straightforward doing it this way because you don't have to create an ELD file, which requires programming knowledge, and then import it. Okay, hopefully that kind of was clear. As I tell traders, I say, you kind of want to focus on trading and not get too, programming is a whole nother business. It's fun to learn, don't get me wrong, you can certainly do it, but you can go down the rabbit hole and spend all your time doing that instead of trading. So it all depends how much time you got.
Hey, Ben, how about you show everybody the pics you found earlier in the stock market review session?
All right. You mean from Yummy? Okay, let me grab that. I'll share a couple of these. These are pretty good. So OKTA was one. Al brought this to our attention, so we took a look at this. And we kind of like this one because it looks like it put a pretty good bottom in back a while ago, okay, and then has gone sideways for a while. And so things that I don't see really too much red here when we looked at it. This was green, yellow is okay, green, green, and green, no red. So that's a good sign. Looks like we had an impulsive move up on the short-term chart, followed by a correction, and now I think we're moving back up. So everything looks pretty good here for a long trade. And if you wanted to wait for it to break here before taking it, you certainly could do that. And I think if it does, then probably maybe we're going to get our way out of the channel and head up into this target zone. And we kind of want to get in right around a price level of approximately where it is now, because if you have to wait too much longer, if you get in at 100 versus 85, then you run, of course, the risk of getting in too late. Your risk reward is not going to be that great, okay? So that's the only problem with that one, okay? And then the other one was KR. And Alexander, are you using TradeStation or are you using Ninja? Because I need to know to type in the appropriate symbol in the right platform. Yeah, that, you see, that symbol won't work in Ninja. So you always got to tell me you're using TradeStation. All right. And then hopefully I'll get data for that. Okay, so this was another one, but we want you to wait on this one. This one was not quite ready because of the red PTF here. So we're kind of waiting for this to, we're hoping that maybe we have a bottom in here, but this looked more promising for a short position. So we kind of like that better and would cover the short if we get below here. So this would be a very quick scalp. Stop here, probably short, and then do that. And I'd probably even wait for this to go red first. But those are looking like two pretty good ones. All right, let's go over to TradeStation and see if I can get that one up here. All right, so let me type this symbol in exactly how you have it. What are you doing with this one? Are you long? Hopefully you're long. All right. Unfortunately, here's the problem with one like this is that you're probably good for some more movement to the upside. We've got green across the board, okay, for the most part. Okay, green here, green here, green here, green here, green here, green here, right? Okay, but nice to get in here, okay, on this pyramid or even this smaller one, but that's okay. All right, so the only problem you run here is you've had multiple pyramids on this time frame. I think we're going to make another high on this. So are you in it already, or you're watching, never traded this, but always watching interest rate movements? Okay, so it looks to me like more highs coming. All right, so if you wanted to take a trade here, I'd put your stop on this pyramid. All right, when this turns yellow, all right, I would probably scale out a teeny bit, and you kind of just want to go up as high as you can. New pyramid comes up, keep running the pyramids up, because eventually you'll get a correction off this. But I think you're good for some more movement to the upside. I mean, the pyramids are certainly indicating that. And I don't see, the only bearish divergence I see here is a little bit here, okay, but still a strong out. And I don't see any here. So you may get a little bit of a pullback, but you know, the idea is if you wanted to use a further back pyramid here or here at 47, you could do that to give you a little bit more room in case you get a pullback sooner than later. With the green PTF, I think you're going to make more highs. Okay.
You hear Alex's comment is really great on his mortgage, right?
Yeah, well, anybody under 4%, I think is going to be pretty happy over the next couple of years. That's for sure. I had heard somebody told me that credit cards now, somebody told me around 28% for some credit card interest rates. Is that right? Anybody heard anything like that, or over 30?
It's like cousin
As much
Vinny.
as 50%. Boy.
Mafia.
That's loan sharking. I wonder why bankers have so much damn money, right? Well, I can tell you, if you have credit card debt, you're paying anywhere near that interest, the best trade you could make is pay off your credit card debt. That's huge. All right, anybody else? Fun session today. Anybody else? So Jim, hopefully I answered your questions, all right? And hopefully you're all squared away on that. All right, Alexander, my pleasure. Okay, great to have you here. That was fun looking at the interest rates. Yeah.
Let's give a shout out to Annette. Hello, Annette. Annette tried to come to stock market review last week. So it's nice to see her here today. So Annette, join us next week.
Okay, hi Annette. And You mean for the Yummy section, she had a hard time getting in?
She got there a little late, so she didn't realize.
Okay, got it. Yeah, so actually we have 2 webinars on Wednesday. We have the market forecast, which is the, I do for the Yummy subscribers, and then occasionally we open that room up for everybody off and on. And that is at 8:30 a.m. Pacific time on Wednesday. And then this one starts at, of course, 9:30 a.m. Pacific time on Wednesday. So there's 2. So it's easy to get confused. But welcome. All right, well, I think that's good. I usually try to do these for about a half an hour. So the main reason for doing this is to answer any questions that anybody has. And if you don't have any more, just write them down if they come up during the week and bring them next time, okay? All right, so great session today. Thanks everybody for coming, and we'll see you back here next week. And Jean, any last minute things you want to add? Go ahead.
No, that's it. Just have a great day.
Super. Thank you, everybody. Bye-bye. Oh, one thing I will mention, the recordings of these are held, all right, in a unlisted area on our YouTube page. And you access that, of course, through the Client Support Customer Hub VIP area. That's an area where you log into. And then go and look under Client Support Recordings, and you'll find the link for that in there. All right, that's it. See ya.